Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 24th. Hope you guys are having a great day here and getting ready for the upcoming 3-day week and Memorial Day weekend here. Let's kind of dive into it because we do got economic news today. As always, we every Thursday we get the weekly jobless claims. So last week we had 223,000 apply for unemployment. Well, the report was last week. These are always the week prior because these are always a week behind. But this was actually revised 1,000 higher. So it initially came in at 222,000 and it was revised higher to 223,000. Now, the forecast would be in that same range for this week was 219,000. And it came in a little bit higher at 234,000. Now, some of this might be attributed to, again, these are some analysts talking and they're kind of guessing, but some of it may be attributed to educational fields, seasonal work that some people that maybe work in the educational fields. Now the school's over for some areas. They might be applying for unemployment benefits. So again, this may be related to that for this sudden influx here. Existing home sales for month of April. So March we had 5.6 million annualized rate for existing home sales. Forecast is supposed to dip a little bit, primarily because we got such low inventory rate now. And again, we're still at historic lows here, and it actually came in much more disappointing at 5.46 million uh, existing home sales. So again, this is kind of the path that we're kind of seeing right now. That we just don't got a lot of inventory, and it doesn't look good. There's a lot of demand out there, which is why home prices are going up. But the problem is just lack of inventory to satisfy the demand that's out there. So let's kind of jump ahead to the headline news. And right now, stock market is down. Dow is down about 200 so far today, and a lot of it has to do with the geopolitical here, and then some trade here. The big thing for the geopolitical, of course, it was announced by President Trump that he will be canceling the long-awaited North Korea meeting or summit, and it sounds like there's been some hostile comments back and forth of late, of course. So that summit that we've been kind of waiting for when they were saying uncertainty, well, it looks like it's been finally finalized that it is officially canceled. So that's talked about. Now, also President Trump is exploring more trade in the sense that he's looking at more tariffs and the import of cars, auto industry. Uh, so that's something that might be coming on the horizon. Again, some more tariff talk here. Later today, we do got a few Fed speakers out there, including out of New York, who's important one is Mr. Dudley, and we got a few of those speaking out there. So again, like yesterday, we saw a pretty big change in the market. Yesterday, reversal after we had the FOMC minutes. But this could be something that could be, it could change the markets a little bit here. So basically, yesterday with the FOMC minutes, if you did not know, basically it was kind of in line with what we saw during the announcement from, expected at least two more rate hikes, possibly a third. Inflation's kind of in check that we're going to be expected to be around the 2% range, but it's okay to be temporarily above 2%. Again, that keyword temporary, because they may see some fluctuations. They don't want to give a knee-jerk reaction if it goes above it and then comes back down. Also, they figure the wage inflation is kind of in check, that it doesn't seem to be out of control. It seems to be in line with things. So everything seems to be looking pretty good in regards to the economy here. Let's kind of move ahead here to the bond market. And here, we finally broke above this 25-day moving average. Something, to be quite frank, I didn't know if we were going to see that. But the geopolitical news, which is emotion, can create emotion, is kind of helping us with this. So if this is long-lived, I'm not really sure if this will be long-lived or if this will be short-lived. So usually emotion-based trading tends to be short-lived. So again, so the next ceiling above is a 50-day moving average, which is almost 50 basis, not right now about 50 basis, but right now we're looking at probably close to 46 basis points, so almost a half a point. So we could see some more improvement in our rates here, which could help us out a lot heading into the summer here. Yields. Here's the 10-year yields. It's dropped below now its 25-day moving average. So the point of this 25-day moving average is this was a ceiling, right? So now the ceiling now becomes, since we broke above it, becomes a floor of support. So if it bounces off it, it may hold and give us support and bounce higher. Same thing for, the 10-year Treasury. Now it breaks below this. This becomes the ceiling, and may be difficult for it to break above it again. So this kind of helps. This is helping pushing mortgage-backed securities up higher, which is again, it's kind of helping us out in the sense that it's helping out interest rates. So interest rates are improvement. There's an improvement in interest rates today, and that's the good thing about this right now. All right, so that pretty much wraps things up. Interest rates are a little better today. If you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork. You can follow me there and get your updates throughout the day. Otherwise, have a great day. We'll look forward to see you guys tomorrow. Thanks again. Bye-bye.